Good morning, everyone. Stock market technical analysis. This channel, we cover stock market trade ideas, stock market charts, everything really all about making money in the stock market. And for the most part, it's all from a technical analysis perspective. So we're going to use leading indicators, trying to give us an idea of where markets and charts are heading and price action is heading in the future, not where it's at today. Okay, so before we get started, guys, leave me a thumbs up if you find value in this content. You know, I'm always trying to scour the market looking for trade ideas, and I put them out on this channel. And then if you guys are interested in learning about technical analysis, how to use some of these leading indicators to find your own trade setups and manage your own trade ideas, then take my course, link in the description below. I kept the price at $99, so very well, you know, there's a good value there. I think it's priced reasonable for everyone to really be able to afford. So check that out. Let's get right into it. I'm going to start out with the triple Qs. Now, there's not a whole lot going on today, so I've been kind of scanning the markets, looking for different, looking for trade setups, looking for trade ideas, anything that's kind of new. I'm not seeing a whole lot, but I want to point out the few things that I am seeing and the potential. I spotted a couple trade ideas that might play out, but we're going to start out with the broad market. Here's triple Qs. And again, we're just continuing to rise. And now that actually I look at it, it looks like we're creating a bearish rising wedge pattern right there. Yeah, it's right about there. So we are actually making this bearish rising wedge. So a couple things. This is an hourly chart. If you go to the daily chart, which is more significant, the larger time frames are the more significant, patterns. So you always want to look at what the larger pattern is first and then narrow it down to the hourly to get your entries or gauge kind of when you're going to take a position. The larger pattern on the tech sector, triple Qs, is this trend line coming off the March 2020 lows. And it was just a rally, pretty much for quite a while. We held support once, twice, and we held support in the cluster right in here. And then we finally broke that support. There's your trend line right there, and we broke it. So that was your sell signal, your initial sell signal. Now what they've done since breaking trend is just created a secondary price channel, and it's actually putting in a bearish rising wedge. This bearish rising wedge is also being formed with negative divergence remaining on the RSI and the PPO. So these are both leading momentum indicators. They indicate where the momentum has, the probability of where the momentum's going to go in the future. Right now, the momentum is waning. It's we're making a new high in price right up here, but we're making it on less momentum. See how, if I zoom in, let me zoom in on the PPO. See how we're downtrending? We continue to make lower highs in momentum. So you're just downtrending in momentum, and that's on the PPO. And here's the RSI, same thing, lower highs in momentum. And yet price right up here made a new all-time high. So new high in price, less momentum. That's negative divergence. That tells us we have a likelihood of failing. And now if I zoom down to the hourly, we are starting to put in this bearish rising wedge pattern. So again, a breakdown. The next sell signal, I think, comes on a break of this bearish rising wedge pattern, a breakdown. And that should set us up for, lower prices. So once we get that, we're going to, once we get the break in tech, we already have a break in the other sectors that were the strong sectors this year, which are the financials and industrials. So on the daily, you can see here's the bearish rising wedge in the financials. We broke trend last, 2 weeks ago or so. And we've been just selling off, a little bounce off of the support. But again, still looks like we're going to continue to downtrend. And then here's the industrials, same deal. Here's your March 2020 lows, nice clean rally, and we broke trend right there. So, and these breaks in trend came with negative divergence. They were pointed out on this channel well in advance before we broke trend that I thought we were going to break trend. So we have a breakdown in those two sectors, and we have a bearish pattern in tech. So again, just waiting for that breakdown in tech on the triple Qs. And just to kind of reiterate that, you can see, a break of this bearish rising wedge pattern on the hourly chart, I think sets us up for, pretty substantial move. But I think we'll at least, we're going to probably hit the support right here at about 335.30. And then, we break that, we're likely going to go a lot lower. So I'll have to tighten that up. If and when we break, we'll start looking at levels to the downside. Okay, flipping over to a potential trade idea. This is SQ, and square, and you can see here we basically had negative divergence way up here. This was a divergent high, this was a divergent high, and we were looking for a break of trend. The trend line that I spotted on the daily chart really comes off the September 11th area, and you can see on the daily we held support there, held support there, held support there. We even held support there. Finally we broke, and we broke, sold down, and then we're coming in for a back test of that trend line. So the last couple days we back tested back here on the 18th, and then we're back testing again today. So to me, this looks like a back test of resistance, and we're likely going to get rejected, here, maybe this week we'll see a rejection candle, but I think we're going to get rejected and head, ultimately head back down to here, but probably down to the next level of support, which I see at about 170.14. So I like that here, and if it, that's a move potentially of a drop of about 28-30% if it actually does do that breakdown. And where do you know when you're wrong and to stop out? Well, if they can recover the trend line, and they pop it up here and it can hold and starts trading up back in this trend line, then you stop out for a small loss. So again, risk reward looks good to me, because the thing is, you have a potential 28% gain to the downside, I think. And if you're wrong, maybe you have a 3-4%, maybe give it 5%, to the upside before you stop out. So about a 6-to-1 risk reward ratio, and that's what you want to take. You want to be taking, you want to put your money down where you have the opportunity to make a lot more than you have to lose. And at this entry right here, short, I think that looks good in my opinion. Again, everything on this channel is just my opinion, not financial advice. Okay, here's another one that's kind of interesting. Kraft Heinz, potential short trade here. Again, Kraft has been in a nice clean up trend line. We pointed out, I was buying Kraft down, and I've been buying Kraft for a while, but I haven't really been involved with it too much lately. Again, Kraft Heinz had a gap right here at 47,874. That's a big gap from way back here in February of 2019. And it gapped down. It was really in a bear market ever since. Since then, though, it's been uptrending. So you have a nice clean uptrend line on Kraft right there on the daily chart. And you can see we're pretty much at support again right here. But you can also see we're starting to build negative divergence. So this is the PPO. You can see momentum is trending downward. And on the RSI, as I zoom into that, you can see also trending downward. So negative divergence, which means these are divergent highs. And we're waiting for you're looking for a potential sell signal or a break in trend. As I zoom into the hourly, you can see we're starting to crack right there. You need to see that pick up momentum and become impulsive. You want to see that selling really flush out and give you a nice firm hourly close below. And if you get that, that would be a sell signal on Kraft. Next level of support, I would say, is likely going to be right there. Let me grab the right tool, not this little squiggly line. And it's right about there at 3607. So that's a potential trade idea, and that's a drop from where there, that's about a 10%, 11% drop. So watch for that. That's a potential. We'll see if the selling becomes impulsive today or if we get that sell signal. And gold miners continue to kind of stabilize. I would say I could see a little bit lower prices in some of these miners. I'm just kind of scanning them. Some of them are starting to show signs that they're going to firm up and hold. Like here's HMY. You can see here Harmony. It's coming down to this buy zone it's basically in the buy zone, but could come all the way down to about 379, 380. I think that's the good area to potentially buy this thing. And you look on the hourly, we're still continuing to build bullish divergence on the hourly. So each new low that we make is actually bullish divergence on the hourly chart. Now again, hourly is can be whippy. You can get false signals there. I don't see anything on the daily with bullish divergence. But coming down to major support, and we've got this downtrend line right here on HMY. We finally broke out, and the breakout was impulsive. It came in the form of a big gap and then a run up. We back tested that trend line support, ran higher, and now we're just, pretty much going straight down to back test that support again. So coming into the support zone, I like that down in here. I'm a buyer. I've been adding to positions, trying to get a little, if it can get a little bit lower, I'll look to add a little more down there. And then, a lot of these are just kind of holding. Here's Agnico Eagle, kind of just grinding it out. Looks like it's kind of grinding out a bottom. So I think we could go down a little bit lower, maybe down to about 62 or so. Should hold down there. And if you look at the hourly, again, starting to build, well, not quite bullish divergence on this one. So that's why I think we go just make a quick little dip down to about 62, put in a bullish divergence on the hourly. A lot of these are starting to look good in terms of building a swing trading position to the long side. And that's really what I'm starting to do is build a position in these over time, just adding here and there to different ones as they hit support lines. And a quick scan through the ag commodities. So the ag commodities is continuing to kind of come off a little bit. And I think that makes sense because they got way overheated. These things have had a really strong bullish run. So to see a good strong correction in a bull run is healthy. It wipes out the speculative money. So wheat continues to look like it's going to come down to at least the trend line about 620, 619, potentially down to 598. Corn continues, the bull trend is down in this area about 1887. And then if it breaks trend, we could go all the way down to about 1750, potentially even lower. There's always the potential for lower. Soybeans, you can see it's selling down. It had a little bit of a bounce, but starting to roll over again. So I think soybeans is heading back down to about 2046. And then copper, you can see on copper, clear uptrend line here on copper right there. And then up near the top, we put in negative divergence. We broke trend right there. So there's your sell signal, and it's coming in for a back test. So I think we're likely going to get rejected. It could run up and hit the trend line, or the sellers might step in early. It's hard to say because it's a pretty obvious broken trend. So look for, ways to potentially trade that, like Freeport McMoran. You can see clear uptrend line there in Freeport with negative divergence near the highs. Broke trend, sell signal, and coming in to resist the first level of resistance. That's good resistance right there at about 37.77. Now, if you are able to recover that, then we could run up and do a full back test up at 44. Otherwise, you're likely going to get rejected here and make the next leg lower, which is what I think is going to happen. I think we're heading down to about 30.15 next. And this is just, it's an objective area right here to short at about 37.80. For a move all the way down to $30 and about 30.50 or so. Coffee continues to kind of work its way lower. So I've got this marked out as a buy zone down here at bottom of the buy zone is about 39.93, top of the zone about 40.70. That was good resistance back here. You can see all the times it held as resistance here, here, and here. And then we finally broke out and it held as support right there. So I think if we come back down, that should be support. Likely hold that area. We could dip below briefly, maybe an intraday dip, run some stops and then recover. That's what you'll want to look for. But in general, still looks like we're heading a little lower in coffee. And all these financials look like they're going to continue to sell off. Here's Ally. You can see we're just kind of flagging out right here. Just flagging. So basically you've got a breakdown. We flag out. This could kind of grind a little higher, hit resistance about 51.11, and then work its way lower. So I still think we're just in a continuation pattern, and we're working our way down to the next level of support, which is about 43.05. And ultimately, I think this is heading down to about 33.30. Nothing's changed technically on this, so I don't always call out the trades every single day that I've talked about when they get going, because usually you're going to get little bounces along the way and then just have continuation patterns. In general, these financials still look good to the downside, and I'm continuing to stay short. Same with these industrials such as EMR. You can see we broke trend. Here's your uptrend line right there with negative divergence near the top. There's your nice clean sell signal, big impulsive breakdown, and we're getting, kind of a kickback rally or a bounce off that initial sell signal. Nothing's changed technically. We could run up and back test and then roll, but I think we're going to ultimately end up down here at about 87.20 and then down here at 83.09. And then I have a level all the way down here at 72. But again, nothing's changed in these industrials. They all look like we're just kind of consolidating, getting a little bit of a bounce action, and then we're going to continue to roll over. So it'll be obvious if it rolls over by the time you get a big red candle down here. This is when everybody wants to short, is after you get a big red candle and everybody says go short. But usually you want to, typically you want to kind of go opposite of what's obvious in the chart. We're bouncing, and if you get a back test, that's an area that I would be more interested in shorting, a full back test. If you're not short already, I'd be looking to add on back test of the trend line resistance, because that's resistance. You want to be as close to resistance as possible so that it gets rejected and you have the potential to get the most gains or lose the least amount. All right, so these all look good. URI is bouncing a little bit today, so it could potentially do a back test, kind of gapped up. So, maybe it wants to run all the way back up here and do a back test. I don't know. All I know is that the trend line, the major trend, was broken. All right, so this uptrend was broken. So I don't know where the point of failure is on these back tests or these kickback rallies. All I see is a broken trend, a downtrend, a kickback rally, maybe it goes a little higher, and then ultimately rolls over, makes new lows. You probably bounce here, and then kind of like that over time. All right, it's not going to happen all at once. It's going to happen over time. All right, guys, that's really all I have for today. I don't see anything else that's really standing out that's super interesting. A couple different trade ideas. Watch MGM. That one's, that's it's not breaking down yet, but there's definitely a trade setup there. Negative divergence on the RSI and the PPO. Clear uptrend line on the daily chart. Just waiting for that impulsive breakdown. It'll look like that. We don't have it yet, so it's just a trade. It's just a trade setup, not an actionable trade. So I'm going to go ahead and wrap here. Leave me a thumbs up on your way out. Appreciate it, and I'll catch you guys on the next one.